But the reality is that nuclear is a very safe form of energy production. It's one of the cleanest, and it's one of the most reliable forms of energy production.
About a year ago, we made a very strong call on uranium, and we only had a couple of people in the chat that cared. Mm-hmm. Now I've noticed we probably have more than 15 asset managers on the buy side that are very interested in your product. They're constantly posting things that you're up to. I think you did a very large trade in the market recently. I mean, walk us through, here's the way I look at it. What if you think of the global supply-demand dynamic around uranium, nuclear power, coal, oil and gas, natural gas, the move up in natural gas and coal has created an opportunity for uranium and nuclear power. But like you said, when you have a 10-year bear market, the buyers have been able to sit back, the power plants, and really relax for a long time. Mm-hmm. You're talking about a grizzly bear, 10-year bear market where lower highs, lower lows, there's no rush to buy. And I remember about a year ago, about maybe 9 or 10 months ago, people talking about either you or someone coming along with this type of product that would allow kind of the other players in the market, retail investors, family offices, institutions, to participate through your uranium trust. Walk us through, the dynamics around supply and demand and what over the last 3 months, the influence that you've had on the market.
Sure. Well, I would take a step back to start and say, we've been interested in uranium for a long time. So yes, it's kind of come to life in the last few months, but this project that we've been working on goes back to 2017. At that point, the uranium market was in the depths of a bear market, went below $18. And just for perspective for your audience, the price at one point in 2007 hit just under $140 a pound for uranium. Drifted down after the financial crisis to around $70. Then Fukushima disaster happened. Price goes from $70 all the way down to $18. And you can imagine at $18, nobody's making any money pulling it out of the ground. So there was a massive overhang of supply and inventory after Japan shut down all its reactors. And it took a number of years to really work off that overhang, work off all that excess supply and inventory. And that's basically been cleared. And now the market is on more stable ground. But what we've seen in the last 12 months is the market dynamics have changed enormously. You've had a number of non-utility buyers enter the market. And these are investors and speculators and financial intermediaries, investment funds, who are basically have a constructive view on the price of uranium, want to get exposure to that. They do that in one of two ways. They get exposure through the mining companies, the exploration and development companies, or it could be through physical. And Uranium Participation Corp was a company that has been in existence since 2005, and that's the vehicle that Sprott took over in July of 2021. We felt that we could bring a lot of value to that vehicle by re-energizing it, modernizing the structure, doing a number of enhancements that we thought would be much more shareholder-friendly and scalable for institutional investors. So when we acquired UPC in July of this year, we acquired about 18 million pounds of U3O8, which is better known as yellow cake uranium. Fast forward to today, we're now through 34 million pounds. So we've had a huge impact in terms of non-utility buyers coming in, supporting the trust, and adding to its stockpile. The demand is pretty steady in terms of the amount of pounds every year that the 444 reactors need to operate. The amount of fuel that they need is about 180 million pounds per year. That's just like any other fuel source. They use it, they consume it. The market in terms of primary supply is somewhere around 130 or 140 million pounds. So you say, well, how are all these power plants been able to operate if there's been this shortfall? And the reason and the way they've filled the gap is through secondary supply. There's been some thrifting. There's been some recycling of material. But that structural supply deficit is kind of being worked through right now. And I think a lot of people that are interested in uranium are betting that the market will move to a higher incentive price in order for all of this kind of shut-in production that's been in place for the last few years to incentivize it to come back into production and back into the market to meet the long-term needs of all these power plants. So it's a really interesting marketplace right now. I think further to that is the fact that uranium is getting, nuclear and uranium are always going to be highly polarizing topics for many investors and individuals because of their association with Chernobyl, Fukushima, and obviously nuclear warheads. But the reality is that nuclear is a very safe form of energy production. It's one of the cleanest, and it's one of the most reliable forms of energy production. And in a world where everyone wants to decarbonize and move to reduce greenhouse gas emissions and meet these different climate commitments, how do you do that? You can do that with renewables like solar, wind, and hydro. But we've learned recently that there are some limitations to those forms of energy production because of their intermittency, which means obviously you can't produce any power at night. You can't produce power when the wind isn't blowing as much. And that's exactly what's happening right now in Europe. The wind isn't blowing as much. And how do you make up the shortfall? Well, you fire up natural gas plants, which everyone is trying to move away from, and the price of natural gas triples in a very short period of time. So I think investors are realizing that it's critical for nuclear to be part of the low carbon energy mix. And I think that's why it's getting a lot of investor interest.